China Uncensored, 8 basic things you need to know about China's stock market crisis. Hi, welcome to China Uncensored. I'm your host, Chris Chappell. Over the past month, China's stock market has been crashing harder than a Chinese student after the Gaokao college entrance exam. The whole world is looking at this and wondering why it happened and what the impact is going to be. My previous episode went into more depth on the issue, but for those of you who want a quick overview, here are 8 basic things you need to know to understand the crisis. Number 8. China has 2 stock markets. Mainland China has 2 stock markets, and both of them have dropped hard. There's the Shanghai Stock Exchange, which is the main one, and the Shenzhen Stock Exchange, which has more tech stocks. Hong Kong also has its own independent stock exchange, but it hasn't been affected as much. So when you hear about China's stock market crisis, we're only talking about the Shanghai and Shenzhen exchanges. Number 7. The big drop. China's 2 stock markets were growing like crazy for months. They peaked on June 12th and then started falling hard. Even with the small rebound in the past few days, they've lost more than $3 trillion in value. To get a concept for how big that is, think about all the money China spends each year on its military. Yes, the world's biggest military after the United States. And multiply that amount by 10. Oh, and you're still not at 3 trillion. Don't worry, the crisis won't actually affect Chinese military spending. Number 6. It's the Communist Party's fault. So remember how the Chinese Communist Party has been worried about the real estate bubble? Building ghost cities and such? So about a year ago, the party was like, hey everyone, how about you put your money in the stock market instead? And they had state media publish articles encouraging everyday people, most of whom had no investment experience, to put their hard-earned savings into the stock market. People thought, this can't fail because the Communist Party has our backs. Oops. Number 5. Gambling. What do you get when you mix millions of inexperienced investors with a system where they think they can't lose? Gambling. In Mandarin, they don't call it investing. They call it chao gu piao, literally stir-frying stocks. Trading and trading without really looking at company fundamentals. What could go wrong? Number 4. The government is panicking. The government is freaking out and wants to stop the bleeding. So they're taking drastic actions. That includes allowing more than half of all listed companies to simply stop trading. Stopping all new IPOs, meaning no new companies can go public. Lending $42 billion through the state-run Securities Finance Corporation to brokerage firms so they can buy blue-chip stocks. And announcing an additional $40 billion economic stimulus package to bolster confidence in the Chinese economy overall. But even if this makes the stock markets go up a bit in the short term, they're still going to be volatile because these are only quick fix solutions that don't address the market fundamentals. Number 3. Margin trading. Margin trading is where you borrow money to buy stocks. This magnifies your gains, but also your losses. That's why so many Chinese investors have lost so big. Why did they take this risk? Because the Communist Party encouraged them to. Since 2007, Chinese regulators have been loosening the rules on margin trading and encouraging people to invest borrowed money into the stock markets. So the markets went up and up and up, and then obviously not up. Number 2. The crisis has very little to do with China's economy. The stock markets going up or down don't actually reflect China's economy overall. That's because the Communist Party has always propped up the markets artificially. The push for stock market investment has more to do with politics. Likewise, only 14% of Chinese citizens are invested in the markets, so the crisis affects a lot of individuals, but not the fundamentals of China's economy. But it does weaken the Communist Party politically, because it shows they're not in as much control as people thought. And all this government intervention shows investors that they can never trust it to be a truly free market. And number 1, the crisis doesn't affect us yet. China's stock market crisis is not the Greek economic crisis, despite so many newspapers making that comparison for some reason. They're not even remotely the same thing. Also, foreigners own less than 1% of mainland Chinese stocks, so the crisis has very little direct impact on the West. On the other hand, if it leads to major economic or political shifts in China, then the whole world will see some ripple effects. But so far, it's not there. So those are the 8 basic things you need to know about China's stock market crisis. Be sure to check out my previous episode where I go into more depth about the issue with China Uncensored copy editor Shelley Zhang. And let me know in the comment section below what you think about the crisis. Once again, I'm Chris Chappell. See you next time. For more on this, I'm joined by China Uncensored's economics copy editor, Shelley Zhang. Shelley, how did we get to this point?
Well, Chris, the Chinese Communist Party was worried about an overheated real estate market. So over the past year, they've been telling people to invest money in the stock markets instead. They had state-run media say things like, it's a super bull market, and encouraging huge amounts of investor confidence.
That sounds like Super Bowl to me. Okay. Well, that's Japan. But according to the director of 56 Flowers, they won't use that kind of cute and sexy appeal to win audiences. They'll promote China's positive energy. So let's see that positive energy. Is it just me, or is this kind of boring? Whoa, what's that? A drone!